What's going on, tax preparers? Andy Fry here from Pronto Tax School. I want to bring you the infamous right before tax season update. These are going to be all the updates that happened essentially since you took your update course. So a lot of last minute stuff. We're seeing more and more tax changes coming along. And this training is designed to give you the tax changes that have occurred, like I said, since you took your annual update and refresher course. And this year, those are a lot of changes. As a Forever Edition member of one of our update and continuing education courses, you actually get this extra training free. Thank you very much for choosing to be an annual recurring member with us. And thank you also to all the other members who might not be in the membership, but have decided to invest your time and money in this training, which I know your time is very valuable. Tax season actually officially started today. So I know everybody's time needs to be well invested. All right, goals for this training to see if this is a good investment of your time is to tell you about the changes that you might not know about that have happened recently and tell you what the changes may mean for you and your clients. It will be a rapid fire training, meaning the information is going to come at you fast and succinctly expressed, I hope. And you also get links out to articles that provide more information about certain topics that we mentioned in case you want to dive deeper into topics that are of specific interest to you. So the government shutdown has ended, at least temporarily, and that's good news. Obviously, with tax season starting, it's not clear whether or not the government may be shut down again. And either way, whether there's a shutdown or not during tax season, you really should be anticipating extremely stretched thin IRS customer service resources. So keep that in mind as you're helping clients who may need to contact IRS. It's going to be very challenging. All right, the other big news that happened recently, actually released on January 18th, was the new and finalized qualified business income deduction regulations, otherwise known as the Section 199A deduction. It's 247 pages of regulations. I've got the links there for you to the final regulations, as well as some commentary from Tony Nitty at Forbes, doing a really great job breaking down the regulations in that article. A big piece of news that was somewhat clarified in the finalized regulations is whether or not the real estate rental income will qualify for the QBI deduction. And the big picture there is if it meets the definition of Section 162 trade or business, it should qualify. There is a proposed safe harbor by IRS that talks about different tests. It actually says 25 hours per year, but they actually talked about 250 hours per year, so it's a little typo. These are all proposed regulations. If you want to read more about that, there's the link. Keep in mind, however, that those are proposed tests, and the income may still qualify for QBI even if those tests are not met. So those are more like guidelines that are proposed. All right. Speaking of somewhat clarified, there was a big issue as far as which businesses are specified service trade or business with regard to the QBI deduction. And those type of businesses have special rules for QBI and may see limitations. So, as tax professionals, we want to avoid limitations on the deduction. And in the final regulations, IRS really continues to point out to Section 1202 as its primary list of which businesses are specified service and trade businesses and which aren't. So you might want to check out a link to that section just as a general, familiarity point. There is the list from that code section that shows you what type of businesses are included or not included in that. And the IRS did narrow the definition of reputation or skill because you could kind of say, well, a lot of different businesses are dependent on the reputation or skill of the owner. Many people that are self-employed have that dynamic going on in their business, obviously. And the IRS did clarify that that concept is to be applied kind of narrowly. So if you have businesses that are not named in Section 1202 specifically, and have something to do with the reputation or skill of the business owner. There was a little bit of clarification that the IRS will more narrowly define what is a specified service, trade, or business and what is not. Definitely grab yourself a good QBI flow chart. This is the best one that I found, which is from Intuit. And you can grab that at the link. That flow chart, I think, will help to simplify a lot of things about QBI as you head into tax season. There was some talk in the regulations about aggregation of businesses for QBI purposes. Many clients who have one business have other businesses too. QBI deduction calculations require us to figure the QBI deduction for each business first and then apply limits, so it's done on a business by business basis. In other words, in these final regulations, IRS allows for some aggregation of different business activities in the case of taxpayers who are seeing limitation of their qualified business income deduction. So for example, a taxpayer might use the 50% of W-2 income limit, you could say, from one business to qualify for QBI on another related business. And IRS does include in those final regulations, which we linked for you guys, the requirements in order for aggregation to be valid, including common control of the businesses that are being aggregated. So it's not like you could just put any businesses together, but there are some very interesting tax planning possibilities here for clients with multiple businesses. And the aggregation is done through an election on each year's tax return. There was also some clarification on the carryover of negative qualified business income. This is going to happen with clients who have a loss in the current year. It's actually going to carry forward that loss and net against the qualified business income in future years. So that actually has somewhat of a negative impact potentially for clients who are incurring current year losses. New things to not understand on K1. I know that's what you've always wanted, is more codes that you need to look up on Schedule K1. And so with regard to the new QBI deduction, the IRS is giving you those new codes. Box 20, code Z through AB, actually talk about QBI related issues, so you'll start seeing those on K1s. There's also supposed to be notations on the K1 whether or not a certain business is a specified service, trade, or business, what are the allocable wages, and even the UBIA for a particular business. So just kind of keep an eye out for those on K1s. Clients that aren't affected by the phase-out limits, it's not going to be that big of a deal. However, clients that are affected by the phase-outs, you definitely want to look up those codes and understand how that will play into the personal tax return. The IRS has released a draft of the QBI instructions, which will be included actually in IRS publication 535. And that draft includes some worksheets that will likely be built into your tax software as well. But if you're kind of getting familiar with the mechanics of how this QBI deduction looks, you definitely will want to check out those worksheets, and I included the link there for you as well. Affordable Care Act saga continues. There was a shorter open enrollment period that actually ended before tax season starts on December 15th. The penalty for not having health insurance still is in effect for 2018 tax returns, 2019 no penalty. There was a ruling, as Latino Tax Professional Association did a good job of sharing on Facebook, that a federal judge ruled the health insurance mandate unconstitutional. However, that does not mean that the Supreme Court will agree with that. So that's just a part of the process of whether it will continue to exist or not. But that is a piece of news that's worth noting. Tax Reform Part 2, there was some talk over the second half of 2018 about a second big tax reform package coming through. Appears to be not happening. The Republicans lost control of the House of Representatives in November's elections, and if you want to read more about that, there's a related link there for you. Forms with significant changes that you'll be seeing this tax season. Definitely a couple forms to watch. Form 8867, the due diligence form, now includes both head of household filing status and the other dependent tax credit, otherwise known as the new family credit, which is that $500 credit for dependent who doesn't qualify for child tax credit. So there are now due diligence requirements and the associated penalties for tax preparers related to a large number of tax benefits. And so you really got to kind of get familiar with that Form 8867, make sure you feel confident with that. Schedule A, obviously, there's not going to be that 2% haircut area of the form at the bottom of the form, the unreimbursed employee expenses, tax prep fees, union dues, all that's gone from the federal side. Remember that for certain states, in California would be an example there, those expenses are still deductible on the state return. Generally speaking, the AMT is way less relevant this year. This is not necessarily new information, but we have started to see as we've worked into 2018 tax returns just how much impact the new AMT rules will have. And the stat there would be 5 million people were affected by, or taxpayers affected by the previous rules, and that number is anticipated to go all the way down to 200,000. And there's a good link there from fairmark.com if you want to check out more information about the AMT new rules. Cryptocurrency taxes has definitely been in the news pretty frequently. No official tax code written on the topic yet, but a lot of news and views regarding the taxation of cryptocurrency and a general acceptance that crypto does have tax implications and will need to be reported in some form or fashion. Large crypto exchanges such as Coinbase.com now sending 1099s to some users and also sending generalized sort of here's what you may need to do tax information to all users. So expect an uptake in that, questions related to this topic. Immigration tax news, speaking of questions, there's really been a lot of immigration-related tax changes in the new tax law. The ITINs that have middle digits of 73, 74, 75, etc., if they were not renewed, already are expired as of the end of 2018. I've had a lot of clients who did not renew. If you did not renew, or if the client did not renew on time, there's going to need to be a new W-7 with the tax return, new ID documents, and basically starting the process all over again, applying for an ITIN. Note that there is no child tax credit or other dependent tax credit for child dependents who live in Mexico or Canada. Estimated tax penalty, the normal rules require the taxpayer to have paid 100% of the prior year tax liability or 90% of the current year tax liability in order to avoid a penalty, right? The IRS gives us a slight break to account for all the uncertainty around tax reform and drops the current year percentage requirement to 85%. And there's a link there for you at irs.gov if you want to look further into that topic. We have been talking a lot about the pressure that we're under as tax professionals to really make sure that we are expressing the value we provide to clients and being competitive in the current market. TurboTax and the other DIY softwares have really launched unprecedented marketing efforts, including sponsoring the NFL playoffs and just actually incredible new product offers. And one example of that would be the TurboTax Live product, which is touting CPAs on demand. Somebody's doing their taxes and they can literally have a CPA like Morgan here, kind of log in and quote unquote walk them through line by line. I haven't used that myself. I'm not endorsing it or saying it's bad, either way. Just saying that there's really a lot of innovation and aggressive marketing among the DIY softwares. Also, due to a huge decrease in taxpayers who are going to be itemizing deductions because the standard deduction's higher now, right? Millions more taxpayers will be able to use free versions of software. So definitely something to be aware of. There's a related link. And this is just an example of the type of advertising that's all over the place, just basically saying it's free to do your own taxes. So obviously for us as tax professionals, we need to be competitive, and if we're charging people, which we are, then clients need to understand what's good about our service rather than doing it yourself. This is another example of the competitive forces that are in play right now. A new venture capital funded outsource your tax preparation concept called Visor, advertising $99 tax prep from CPAs. And just a lot of gurus in general, and to some extent myself, as well. Pretty worked up, with doomsday predictions about the 1040 market's going to shrink or even just fall off a cliff. And it's definitely something to think about. That being said, it's one of those things where I'm aware of the fact that I can change my own oil. I don't do it, and I won't do it ever. So there are always going to be, some demand for help with taxes. Absolutely. We do believe that tax pros who have one, a strong relationship with clients, and two, whose services have a demonstrable ROI for clients, and then three, tax pros who protect clients from real and perceived risks will continue to do great as tax professionals. Now, nevertheless, it is absolutely crucial that every tax pro take a look at what's going on in the industry and realize, we're in a new environment, and so we're really encouraging all of our members to just be competitive, be ready for new competitors in the marketplace, and be ready to just serve your clients better than anybody else does. There has been somewhat of a return of the RAL, the refund anticipation loans, back in fashion, and once again, an important part of the early tax season picture. Loan limits have increased, and the new ways of pricing the products, such as charging the ERO, charging us the tax repair, rather than the client get away from the very high interest loan aspect in marketing the products. That's definitely another update to keep in mind. Last but not least, there has been somewhat of a real estate slowdown in the California market. I would say somewhat, because it's definitely not some kind of crash, as of now. It has been a full decade of rapidly rising home prices, and if a slowdown continues, or even if not, you're going to expect new housing-related questions from both sellers and buyers. Real estate-related tax prep and consulting remains a fantastic niche for tax professionals, in our humble opinion. So definitely want to wish you guys the best of luck. This tax season is going to be a challenging tax season, but I hope it's also a great one for you. We do have a way now, in response to our members that have been asking us for this for years, to actually provide you with personalized, expert, 100% guaranteed help with any tax questions or concerns that you have. And if that sounds like something that would help you out this tax season or year-round, feel free to visit that link right there, and you'll see all the details about our new support membership packages. So that's a little something we wanted to add this year, being that there have been so many changes, so much uncertainty, and just want to help you guys to be as successful as possible this tax season and beyond. So thanks for investing your time to watch this last minute, right before tax season update, and let's get it going. It's tax season, baby.